Welcome to Joe's Happy Hour, a show about markets and life hosted by Joe Fahmy. This podcast is for informational and entertainment purposes only and should not be regarded as personalized investment advice or relied upon for any investment decisions. Joe Fahmy is an employee of Zor Capital, and he and his clients may maintain positions in the securities discussed in this podcast. All opinions expressed by Joe are solely his own and do not reflect the opinions of Zor Capital. The views expressed by guests are their own, and their appearance on this program does not imply an endorsement of them or any entity they represent. Thank you and enjoy the show.
Jay Woods.
Joe Fahmy.
Welcome.
It's good to be here. Good to be in Vegas. Thanks for having me.
Thanks for being here. I really appreciate you doing this.
Yeah, this is going to be fun. We talk all the time, but to actually record it, who knows where this is going to go.
This is unscripted. I have some notes, but I don't think we're going to stick to this.
No way.
Quick introduction. Chief Global Strategist at Freedom Capital Markets.
Correct.
NYSE Executive Floor Director, a professor at Fordham University.
Yeah, that's the new gig.
Professor Woods.
It's crazy, man.
Isn't that weird?
Crazy.
And a CMT.
Yep.
Country music technician.
Chartered
market technician.
Exactly.
And you're on the board of the CMT.
I am on the board, New York chapter president, association very near and dear to me, and it's helped me pivot in my career. So God bless the CMT.
That's awesome. Anything else I forgot besides Eagles fan?
Softball champion 6 times in a row, over 40.
Anything after 1980?
No, I'm great at one-hit wonder 80s trivia. If we want to go there later, we can do that. But I think you covered the good stuff.
No, thanks again for being here. Just so the audience knows a little bit about you, background, what got you into finance, your interest in that, from your eventual path from being a trader to now an analyst and strategist. That whole background, I'd love to hear about that.
Yeah, well, I went to college to study law, but before that, when I was 8 years old, I was gifted 2 shares of IBM by my uncle, who just happens to be in the business. His name's Ralph Acampora, founder of the CMT Association. And he gifted me those 2 shares under one condition. You got to do a weekly bar chart. And I'm like, yeah, whatever. I'm like, it gives me, a quarter every quarter. And I'm like, yeah, let's do it. So, up, down, and for 2 months, I'm charting this on paper. And then he comes down. I was in Philadelphia. He was up in New York. And I'm like, Uncle Ralph, what am I doing with this thing? He's like, let me see your chart. And he gets a ruler, draws a line, and connects the lower highs. And he goes, which direction is this going? And it's going up. He goes, kid, that's an uptrend. You want a stock like this. And so that was my first foray into it. I didn't really think much of it. I went to college, Fordham University, to go to law school, and then I needed drinking money my junior year. I was running low, so hey, Uncle Ralph, I can't get any of these law internships. Is there anything that pays? And he hooked me up with an internship, Sherwood Securities. Paid $60 a day, 2 days a week in 1990, 91. That was good drinking money. That's all I needed. Yeah. Pizza, too. I had to eat. And that opened my eyes. Like, I'm on a trading desk. This was right out of Charlie Sheen's 87 movie, Wall Street. And I'm answering phones, yelling, screaming. Great group of guys up there, a lot of mentors, and I just wanted to learn more and more. And luckily enough, the people down there knew guys on the floor, and they said, hey, kid, we think you'd be a good fit. Why don't you interview with somebody down on the floor? So I joined a firm, Spear Leeds and Kellogg, when I graduated in 1992. Spear Leeds, oh man, great times.
Goldman bought them.
Goldman acquired them, maybe the worst deal they ever did in their history. But I was a benefactor of that. I don't think Goldman was hiring a kid out of Fordham University who was pre-law and communications. But I was able to learn a lot through my Goldman days. I mean, I made it there for the 14 years. They were a market maker on the floor. And, we may get into this, but they had 330 employees at their peak in 2005. And we go through the financial crisis. We go through a technology change. And we went from 330 people down to 15. So I was able to adapt, survive, and adjust. One of the worst periods of my life, losing so many friends, people that were at my wedding, knew my kids, we hung out with regularly. And, that life lesson taught me how you need to continue to adapt, survive, and evolve, even though, price action is still the same. but the way we handle things, the way we deal with things, you need to really be on top of your game. So the Goldman experience was great. Then we went to an electronic market maker, IMC. They left the business in 2020, and I had a decision to make. I could have tried to hook up with another firm on the floor and continue to be a market maker, which I really liked, but it was boring. I like to deal with people. And I started doing a little TV. Started off doing, stuff on Twitter with the New York Stock Exchange. And it was during COVID. And then you look at this face, the face of the ugly day. They hate bald guys. You notice whenever they have the face of the bad day, the clickbait.
It's always a bald guy.
It's always a bald guy
with
holding their
palm
head.
Palm in his face.
Yeah, and I couldn't get two across, or lunch was late, and then boom. And, that built up a little reputation. And then I got to talk as an executive floor governor down there. They asked me to talk about what was going on during COVID and how we had to shut down and the market swings. And it also helped, unfortunately, that Mr. Cashin, Art Cashin, a legend down there, he broke his hip. And he wasn't doing as much TV. They asked me to do some TV. My firm didn't allow it. But they allowed me to do a lot of social media hits that the NYSE was doing. And that snowballed, and when it was time to pivot to a career, someone got in my ear, said, no, we think you can help us run our trading desk and do some media. And that went well until it didn't, and that firm ran into some troubles, and I got let go. And within an hour, I had 3 people in my ear. One of the most touching, humbling experiences of my life. I had friends like you I talked to, Josh Brown, talked to Michael Batnick, J.C. Peretz, but Jim Cramer. I've known Jim for years. We're Eagle fans. That was our connection. I've given his family some tours. He heard about it thanks to one of my friends who got in his ear, and he grabbed me. And he yelled from across the floor, Jay, what is going on with your life? What happened? How'd they let you go? He goes, hey, these things happen. He goes, put me down as your number 1 reference on your resume. And I don't even think he remembers doing this. But you show up in an interview and Jim Cramer's your number 1 reference. People listen.
It's powerful.
So, and you have all the naysayers and the inverse Kramers. But Jim is one of the most amazing people that I've seen work. And for him to reach out in that time of distress in my life was great. And now I've joined Freedom Capital Markets, and they thought I could do some, media hits, and now it's been a blessing. But it's one at a time. It's just like trading. You have a good day. All right, don't let your ego get the best of you. Go on to the next day, and because I'm going to say something stupid, I'll probably say 5 stupid things talking to you.
I haven't even spoken, and I've already said something stupid.
Oh yeah, it's the nature of the beast, especially when you're like just across hanging out with a friend.
Yeah.
But yeah, the media thing is taken off, and I've used the experiences, and this is what I find is relatable. And you're relatable. Josh Brown, relatable guy. Michael Backton, JC. Yeah. These are my friends, and we just hang around talking, and we tell stories about our trading experience, life experiences, and I had 28 years as a market maker on the floor, and I didn't realize these stories were like, people want to hear about it. They want to hear about your worst day, your best day, the craziest crowd situation you've been in.
Yeah.
How did you survive, 9/11 story. We can go there later if you want to. But, there are so many stories that have accumulated. You're like, oh, wow. But as long as you can take that story, get a life lesson from it, and then attribute it to some event that we're dealing with today, that actually goes a long way with people. So if, and now I'm teaching, it's crazy, but the technicals to me are the one thing that's been constant. I know you use a lot of technicals in your research, and it's the one thing. It's about risk reward. No one goes in, and if someone comes on your show and says, hey, I've seen it all, just walk away. Yeah. That's what's great about what we do following the markets. You don't know what the next day is going to bring. So that's what makes it exciting, and it makes us good-looking bald men as we rip our hairs out trying to figure out what the next thing is going to be.
Yeah. 100 things just went through my head. Thank you for that intro too. And that
I ramble a little.
It's not rambling. It's a fun conversation. I didn't know Ralph Campora was your uncle.
No,
I did not know that.
Yeah, I mean Ralph.
He is.
He opened the door.
Godfather of technical. Is that his?
He's my godfather, and he's also the godfather of technical analysis. Yes,
that's pretty impressive.
Yeah, Ralph and I very different paths, and it's very ironic that we are now. I'm doing what he did for so many years.
Yeah.
he taught me the technicals. He taught half of Wall Street. He walks the floor of the stock exchange. This goes back to my early days in the 90s. Ralph, I took your class in 87. I took your class in 85. He basically taught the whole floor the basics of technicals. And you need to know price action.
And a lot of institutions got his research. Like he was one of the original technical. Now everyone's an armchair technician and with a crayon and can draw whatever. But
wait for a bear market. They're all technicians in a bear market.
But he was one of the original, not just for the people on the floor, but for institutions to subscribe to his research as well.
Yeah, and, he made one of the best calls at the time. In 1994, he wrote a paper called Dow 7000. The Dow was not even at 4,000 at that point. And people thought he was crazy. Then you look back, and you look at all the long bases we had in some of these stocks just breaking out. Like, yeah, this was kind of an easy call, but when you call for almost a double in the 3-year time period.
During the 94, 95 bear market before it took off.
Exactly. Yeah. We were bottoming, basing, just starting to turn.
Yeah.
He saw it. He made a bold call. His firm, Prudential, backed him on that, which is hard. If you're going to go, if you work for a large institution back then, and you're going to make a big call like that, you better be right. And that call is what really catapulted his career. He was already on Wall Street Week, one of the elves. Liz Ann Saunders was one of those. She defies time.
Yeah,
I remember watching her as a kid.
Her. She's one of the best.
Yeah, I here's a quick story.
I've never met her, but I've seen her at conferences, but I've never met her.
I've met a lot of people. Celebrities come down on the floor all the time. I got to shake Kobe's hand. I've got Joe DiMaggio back in the day. That's how old I am.
Yeah.
But there was only one person that got me tongue-tied. It was Liz Ann.
Really?
I wanted to go up and say, I used to watch you, my uncle, and she just put her hand on my back and said, take your time, get it out. I've never talked to her ever since then. She's a legend.
Yeah, I've heard nothing but great things about her.
And she's on her game still. It's amazing.
Still super sharp, yeah.
Yeah.
That's
it's
impressive.
a lot of work to be on your game. She's tough.
Yeah, to be that consistent over time. Another thing from what you said about adapting, I always think of the Paul Tudor Jones, in the markets you adapt, evolve, or die. I'm paraphrasing his quote, but because the markets are always changing. So it's interesting because in your career, you've had to change based on technology, based on what went on the floor. So when at Spear Leads from over 300 down to 15, was that reduction because of the takeover, getting rid of workforce, or was it because of technology, or a little bit of both?
It was a little bit of everything. I mean, you talk about markets evolving. We were trading in eighths. When I got my seat in 1998, we were in eighths. And then in 99, we went to teenies.
Before teenies?
Oh, my God. The teenies, the old guys, the old guard, they freaked out. That's it. They're cutting my profits in half. I'm out of here. I'm the young guy. I'm like, let's go. I'll take 6 1/4 cents on every trade. You buy it, you sell it, you're making 6 1/4 cents. Like that.
Yeah, it's like Office Space when it builds up and they look at the balance.
Oh, exactly. Great movie. But then we went to pennies, and then heads exploded. And then we had to announce every trade. We had to cross every trade because we had the crowd had the option to break us up. 99 cents for 100 at the figure, take it. And they could say, it was mind blowing because now we had 100 price points. And then we're like, everyone's going to trade in nickels. And then someone goes, I'll pay a penny for that. And you look at that person, you're like, I'm going to strangle you. Really? You're going to do it? But everyone did it. It changed, and we couldn't write down. We couldn't keep up. It was like John Henry, the Axeman. Was it John Henry? Who was the guy that he was competing against the steel driving man?
It sounds like it. Sounds like a name. Yeah.
Let's edit this one out because
that's all right.
But the technology was coming. We couldn't keep up with the speed. We couldn't announce every quote like we had to.
Okay.
And as a result, they ramped up the technology, and we didn't need runners. We didn't need this, and we started thinning the herd. You start thinning the herd, and then you throw in a global financial crisis, and it's just gasoline on that fire. And I was trading 5 stocks. IBM. The stock that I got when I was 8 years old, I eventually got to run that stock for a little while at least.
That's pretty ironic.
That was
so
itself.
You're gifted a couple of shares, and then you're the market maker. For
it
comes full circle.
The full circleness is crazy. But that stock was the gold standard. It traded by itself, and we had an IBM broker. And that broker would just trade that stock. And people, you talk about proximity, they just wanted to be in that crowd just in case the runner came in with an order to buy that stock. Co-location, you want your server to be closest to the next server. Well, Goldman Sachs had 30 brokers on the floor. We had 20 posts. One was at every post. One may be in IBM. One may be, in Nortel when that was the biggest stock in the world, or iOmega. And this is, people are like, what are these stocks? I don't know them.
Heard of any of these?
I know. Digital equipment, compact computer. These were the .coms that were on the floor of the New York Stock Exchange at the time. But these, we had somebody everywhere, and then you didn't need it. IBM traded with Visa, and then Salesforce.com, and we could handle multiple stocks because the technology enabled us. So then we started thinning the herd. Then you throw in the financial crisis, and you had to cut costs. Best way to cut costs? Fire people. And unfortunately, that's what happened. So those that were left had to differentiate themselves, and the technicals really played into that.
Yeah. What is the biggest change as far as I know it's funny when you go down, at least last time I was down on the stock exchange, it's like creaky floorboards, but the most insane technology everywhere.
Yeah.
What's the biggest change from, moving from that system you described to the technology? Is it just the way life is? Technology just makes things more efficient and faster?
It is, unfortunately, and it's
because I know the reason I ask really quick is that I know a lot of the old school market makers don't like it, but it is, again, adapting to what.
Yeah, of course they don't like it. And when we were adapting to that technology, we had young quants, I'm like 35, 40 at the time as we're changing, maybe even younger than that. And they're like, why did you buy that? Why did you sell that? And then they're writing programs as to why we were doing certain things, mimicking successful behavior. And then when I screwed up, they would edit that part out. So it was an evolution where people were trying to recreate what we did in algo form and then replace us. So it was not fun. And the old school thinks they can go back in there with paper and pen and handle a crowd. Well, guess what? There's no crowd. You program your algorithm. So what changed? You needed a lot more patience. You needed to wait. You needed to be instantly wrong, because when your bid was hit, chances are it got hit because it's going a little bit lower. So you had to change. I would rather buy stock on the way up with a buy stop than wait for my bid to get hit because I want to buy stock on the way down. Right. When it was on the way down, the momentum would continue. So as a trader, I would buy up and sell down, and, well, that doesn't make sense. And a lot of the technicals, people are like, well, if you like it at 90, why didn't you buy it when it was trading at 85? Well, it didn't confirm it was going higher until it got to 90, and my risk-reward setup was better there, because if it was 85 and it broke down, this thing could have gone to 70. It's that's where the technicals get a bad rap, and I get it. I trade stocks. Like, I can see a chart, I'll trade it. I don't know what it does. Upstart, I don't know what it does, but I know the chart looked good at the time. So it's the evolution. The guys down there, they're very skilled at what they do, but now they have patience. You hear beeps and boops, and that's someone's bid getting hit, someone's algorithm getting met, a price discrepancy in the stock, because they're watching 50, 60 stocks each, and you can't keep on top of it, and you can't focus on the ones you want to like it was. And for me, it was boring. I'd rather get in front of a crowd and now talk about the market, talk about ideas that I like, and trade for my personal account on a longer-term time horizon, then get in there. And, of course, there are days after the election, I wanted to get back in there and trade.
Yeah.
The volatility was epic, and you see these gaps on the open, and I miss that more than anything. But what I miss the most are the people that were down there. They were the greatest.
We'll get into time frame in a minute. You alluded to a lot of people love the stories from the New York Stock Exchange. I've always said the best stand-up comics, in my view, are the ones that are just telling amazing stories.
Yeah.
Like Dave Chappelle, Tom Segura, Chris Rock. These people are just some of the best because they're just, I think you're right. People love stories because they can identify with you. They're captivated by them and stuff. I specifically, I want some Art Cashin stories. You mentioned 9/11. You were on the floor that morning?
I was also the specialist for American Airlines that morning. Came in long 20,000 shares. It got upgraded that morning. I believe it was Warburg. It was trading up $1. I was going to have a good day, and then we know what happened. So you don't think about the loss. And then on 9/17, I was no longer the specialist at American Airlines. My boss took it over, thank God. You want to talk about insane crowds. That was nuts. But that day, we don't, I think the Dow, the S&P was down 7%. We came in that day to go to work. We shut down on the 11th. The attacks happened before 9 o'clock that morning. A few of us went outside to see what's happening. You see the pandemonium. You see the buildings.
I remember around that time, but I forget. I know trading was halted till the following Monday.
Yeah.
But was trading actually halted that day or end of the day? I forget.
It was that morning. I don't know when they officially announced it, to be honest with you. Okay. I had just become a father, and you think very differently. I'm like, I'm going home to see my kid. And I just moved to the suburbs, so I was in Hoboken. I had a 10-second commute. It would have been great. I commute through the PATH train, so I wasn't going back to the Trade Center to get the PATH train. For those not familiar with it, that's the train that goes into the World Trade Center every day. So I just didn't think. My instinct was, I'm not going back in the building. If they open, they'll open without me. When the second plane hit, you knew we were under attack. The first one, you're like, who's this idiot that hit it? It was a beautiful day. And you remember everything about that day. And, we all have some form of PTSD, but we have an unbreakable bond, the people that were there that day. And yes, it was a Tuesday morning. We never opened on that Tuesday. I got on a boat with a lot of my colleagues, and it said, we're going to Jersey. And then they have documentaries on the boats that came that day. And it just was unbelievable. So I was out early. I can show you on a map where I was when the first tower fell. I was kind of parallel to it. And then in Weehawken, New Jersey, when the second one fell, it was surreal. It still doesn't click with me. We lost 2 members that day. That was awful. Meeting at Winners on the World. What are the odds? But everyone that was down there got out, survived. The key was getting out of the cloud, and I avoided the cloud. There have been some people that got sick that, were in the cloud. But that leads me to, the best day of my career. People ask, oh, was it the most money you ever made? No, the best day of my career was being with that group of people on 9/17/2001. I don't know how much you remember about that time. No flights, no sports. They shut down football that weekend. Baseball wasn't back. Broadway shut down. Leno and Letterman, for those old school people, they were the late night show hosts at the time. They were fantastic. Letterman the best. And they didn't know how to come back. The first operation to open, the first people that went back to work were the people at the New York Stock Exchange. We weren't doing anything heroic. We were doing our job. Dick Grasso, his team, they got the technology back up and running so we could reopen on that Monday. The people that came to the floor to ring that bell, the first responders. We had first responders every day for 3 months, just applause coming through. They'd be working on the pile, and then they would come through, ring the bell. But we had the fire chief, the police chief. We had our mayor, a guy named Rudy Giuliani. Yeah. Our senator, a woman named Hillary Clinton, hugging up on the podium. Imagine that scene today. I think you need to wheel him out in Hannibal Lecter garb to make that photo op possible. It was the most unifying, patriotic thing I've ever been a part of. And, we lost a lot of money that day. As market makers, you're the other side of the trade. So when things are going straight down, you're buying. When things are going straight up, you're selling. And it's not beneficial. But that
didn't matter.
No. And, we were the first people to open that day. And that bell was a big FU to the people that knocked those buildings down. Yeah. Big sign that America was back. And so when I look back on any day in my trading career, just going to work on 9/17, I couldn't tell you how I traded, what happened. I remember the hugs. I remember the stories. I remember hearing about loved ones who lost loved ones. It was awful, but we came back to work that day, and it was awesome. It's just, we never knew how serious that was, and then you think back on it, and you're like, wow. That was
kind of related as my favorite ESPN 30 for 30 was when President Bush threw out the first pitch, a couple weeks later at Yankee Stadium. I still get the chills thinking about it and watching it because people were like, we weren't Democrats, we weren't Republicans, we were Americans. And he had, at the time in the history of presidential approval ratings, he had the highest ever. Yep. And when he walked out onto Yankee Stadium with the NYPD and fire, all the patches, and he threw that it was like King Kong.
That strike was unreal.
And he threw a strike.
Yeah, perfect.
Yeah, and that's just that whole background of tying in sports coming back and the whole how patriotic and everything was around there. But I forget that the first flights were suspended. A lot of things were closed. but the New York Stock Exchange was the first thing to come back, which shows the resilience of.
And I love the sports aspect. The sports analogies and trading analogies go hand in hand.
Oh yeah.
And I know it's very testosterone-y, but it's it's just, when you trade and you're successful, if you've had success in sports, and I was blessed, we left this out of the intro. I was on a crew team. My biggest training for the floor, I didn't know this at the time. I was a coxswain on a crew team in high school, national champions, 1988. By the way, St. Joe's Prep, go Prep. And but
did you go to Henley?
I was not in the boat that went to Henley. I was in the second varsity 8, but the varsity 8 went to Henley.
Okay.
We don't want to talk about what happened over there.
That's okay.
Eaton had a very good team, but I did not get to go to Henley, but we did win a national championship. But you're the little guy amongst these big guys, and you had to yell at them. They had to respect your authority, and you had to keep them in line. Fast forward to my time as a specialist on the Fordham New York Stock Exchange. I'm not the biggest guy in the world, but you had a lot of personalities, and you had to make sure they could respect you as the market maker controlling that stock and get them to, play along. And then you try to pick their pockets sometimes too. But I don't want to go down that road because we do get a bad rep because most of us are really good guys. And it was an experience like no other.
I think I went down on the first time ever is before I knew you, 98-ish or so. I went down to the stock exchange, and 1998 or so. I was young, like super intimidated, super nervous. And I get down there, and I felt like it was a lot of Italian and Jewish people down there. And they're like, hey, what do you got on the Knicks line? When I got 5.5 with my guy, like, I thought it was going to be super intense, and it was going to be this like really intimidating thing. And it was just a bunch of regular down to earth guys.
Yeah.
And talking about, sports, talking about whatever, obviously doing an amazing job at what they do. But it was definitely intimidating until you realize, okay, these are just great, like, human beings.
No,
we're all the same.
The downtime there was, talk about lessons in life. It was that group of people, that cast of characters, nothing like it. You can't recreate it. You tell stories about some of the pranks we pulled. We put spurs on people and have them walk around and just yell yeehaw, and they're like looking around, oh, I'm the cowboy today. You powder shoes, you'd stomp off, and snowing in New York, and as soon as someone said snowing in New York, everyone looked down at their own shoes hoping they weren't the guy that got powdered. Kramer did not appreciate getting powdered. We did stupid things. A lot of eating contests. Don't try to drink a gallon of milk in 15 minutes. It just can't be done. You'll die. The saltine challenges, trying to eat 2 packs of saltines under 2 minutes without water. Good luck. Wow. Yeah, we did hot dog eating contests.
Yeah, I was going to say, the exchange should have been moved to Coney Island.
Well, there were some people from that genre, so it did fit hand in hand. And this was before compliance and human resources. The things that went on, you couldn't replicate. But you look back and you're like, wow, that was an interesting time. And
I do remember hearing from other people, I won't mention names, that said once it became corporate and public and all that, a lot of they just hated it because the compliance kind of not ruined the fun, but it was just just sort of like a big fraternity, so to speak. I don't know.
No, there's truth to that, but that team down there, those people, when push came to shove, and you needed someone to represent you as a customer, those were some.
Oh yeah,
those people were cutthroat.
They were hardcore professionals that did an amazing job.
Yeah,
and still do.
Mm-hmm.
And anyways, it's just interesting. Any like top 3 stories, if you want to include Art Cashin in one of them?
Well, Mr. Cashin, as I call him, was a legend. He just passed away recently, and that was a big loss. He was the one calm in the storm. When anyone needed a market reference or like, what is this event like? Whether it was 9/11, COVID, flash crash, I don't think he had one for that. That was new. But he was always there to put things in perspective. Historically, he had the memory of an elephant, if you will. That's something with a good memory, an elephant.
Yeah.
And he never flinched, never panicked. Worst trader, I'm told. He never traded in one of my crowds. I started in 92. He was never sent into a crowd with an order. Apparently, he wasn't good at it, but he was the guy that knew what to do when things were going crazy.
Wow.
So he was that leader. And if when Mr. Grasso, Dick Grasso, the former president of the exchange, he was ousted in 2003, and I'll never forget that chaotic board meeting up in the iconic boardroom of the New York Stock Exchange. And someone stood up and nominated Art Cashin. It was unanimous. Art Cashin should be the president of the exchange. He said, I'm humbled, but that is not for me. And we went down different roads. But the most respected person I've ever met. There isn't one person that can say anything negative about the gentleman.
Thing, as you mentioned with Lizanne, I've never heard anything negative about Art Cashin. Everyone loved, universally loved.
Yeah, and talk about storytelling, the art of storytelling. Bob Bazzani wrote in his book, which was great, a whole chapter dedicated to Mr. Cashin. And the way to relate to people is to tell a story. So I like to tell those stories. And Mr. Cashin, there will never be anyone like him. He was one of a kind. And I take a lot of what I do in the media. Like, I didn't speak to him. I was intimidated by him. I'm like, I don't belong here. But I would, when you want to talk to him, you go to the bar. You go to Bobby Vans across the street. You see him in the Luncheon Club pre-2007. And I've hung out with guests, and I brought them over to him. And he'll tell those great stories, and you just listen. You just soak it in. You know, I didn't feel I was worthy to be in that crowd. The only time he came up to me was when I got that red stripe, which was the executive floor governor at the exchange in 2017, which was the highest elected position there, one he held for years. And he shook my hand, congratulated, and said, hey, if there's anything you need, just let me know. And that was just like, wow. So Mr. Cashin, may he rest in peace. He was a legend down there, and then the way he transitioned into media. There were a lot of people that didn't want Maria Bartiromo. She was the first person in media to come broadcast from the floor, and he had her back. And then he started doing media, and he was reluctant at first, but he just had a knack for it. And he changed what makes us very relevant today. Without the media down there, and a lot of guys that work there don't want to admit this, but we go hand in hand. We love having CNBC down there with the studio right in the center, right under the bell. Yeah. You can ring that bell and then write down, and you can talk to Faber and Kramer, Carl Quintanilla. There's nothing like it, and it's one of the largest media centers in the world. And it was because of Maria coming down in 95 and Mr. Cashin getting the floor community to rally around that. Because Maria tells great stories about getting elbowed and the people, and she can name those people. I won't, Mr. Robin. I can name a couple. But she was tough, and she could tell a good story, and she'd get down there and get in people's faces. And, in the 90s, that's all people wanted to talk about was the stock market and the Yankees. And, no offense. I know you're a Red Sox fan, but those were good times for the Yankees.
I'm okay with that.
But, Mr. Cashin, he really guided us through some turbulent times, and we don't have that beacon down there now, so it's kind of odd. But he's great.
Yeah. Any other stories, whether it's funny stories, enlightening stories, lessons, anything interesting people that came through, anything that really resonates.
I didn't like
with
to
you.
tell trading stories because you can sound really egotistical, and if you thought about the amount of money that would change hands every day as a market maker, you're long 100,000 shares of a $50 stock. Whoa, that's a lot of money.
Yeah,
I wasn't holding that the long term. I remember buying almost 200,000 shares of UTEX at 75, almost getting killed by my boss for doing it. I took an entire offer because it was one person, and it was going to throw off the VWAP, which was just coming into play, and I was right. And I get a call from upstairs. This is when I was at Goldman. Why are we long over $20 million worth of United Technologies? It's going up. That was not what they wanted to hear. And I just had to lighten that position. I took it at 75. It would go up to a quarter. Boom, it would trade back to 75. That was me hitting every bid that was coming into the book to get out of that position. It took a little time. Got a lot of heat for that one. I was right in hindsight, but it wasn't about being right. It was about managing risk. But there is one trading story. I kept it under wraps. I think 15 years is, when you can finally bring these out.
Past the,
insurance stocks and hurricanes, they went hand in hand. In 2005, everyone knows Hurricane Katrina. All right, that was devastating to New Orleans. The insurance stocks took a hit. That was July of 2005. Go back if you're bored and look at monthly charts on that one. And I survived at trading Allstate. That was one of my stocks, but I saw how it acted, and the technicals were coming into play as well. The next, 6 weeks later, Hurricane Rita came. Hurricane Rita was a Category 5, same path as Katrina, and people were overreacting, like, holy God.
I remember this.
Yeah, it's gonna destroy New Orleans. Again, how can you destroy something that was destroyed? But stock-wise, people were panicking. and the stock was down like almost 15% that day. Biggest move they've ever had. Insurance stocks don't really move that one. They're very boring. It was coming into a major support level. $50 was that level. And my job as a market maker, manage risk. All right, it's going down. I'm long, 30,000. Hit a bid, buy it cheaper. Hit a bid, buy it cheaper. Taking little losses. All right, it was down $5. I was out $60,000, and I was long 60,000 shares. A big position. It's 11:45. At 12 o'clock, every day the weather report comes out. All right? Category 5 is as big as it gets. It's not getting downgraded, or it's not getting upgraded to a 6. I think we may have that coming in the future with these hurricanes. But at that point in 2005, I go to my bosses. I'm like, guys, I'm avoiding this one. If it rallies $1, I'm even. The weather report comes out at noon. Can I get long 100,000 shares? And they look at each other and they go off in a little corner and they come back. They go, no, we love it. Get long 200. And then I start to sweat blood. I go back to my clerk, Tommy, who's still down there, great broker on the floor. And Tommy's like, what did they say? They like the idea. They want us to get long 200 that we're taking them all out in about 10 minutes. And like, oh my God, talk about like just strapping on the gloves and the armor. And my friend Ben next to me, he was the market maker. He came over. He's like, we're doing this. I'm like, we're doing it. And I grabbed the remote, and behind me was the TV. It was always CNBC. I had in charge of the remote. So boom, Weather Channel, and you just see that hurricane churning in the background. I'm like, this is my Clarence Beeks orange juice report moment.
You're hovering around the TV for the.
It's 11:55, and I go, I'll pay $50 for 100,000 shares. There were 5 people in the crowd. Sold. I take it. Okay, Tommy, what's our position? You're long 220,000 shares. I'm like, holy shit, I'm long 220,000 shares. It's now 11:58, and it's quiet, and everyone's just watching, and the crowd is there. And then all of a sudden, this is the last thing I remember. I wish they filmed this. This would be my movie. 12 o'clock. The last thing I yell out, it's now category 4. The sellers turn buyers. It gaps up 2. I have an old school broker saying, you got to sell stock. I got another guy jumping over the top of me saying he's not selling an effing share. And it was just chaos. Next thing I know, it was up 3 and change. Best day trading wise of my career. And I blacked out. 9/11, I remember everything that happened today, minute by minute.
Yeah.
The best day of my trading career. I have no clue how it resolved. I just know that it was one of those epic days that you don't get very often. And then after the financial crisis, we didn't take positions like that. And I wasn't buying 200,000 shares of UTEX. I wasn't doing it. Overnight risk, never. We would never have a position going into earnings. The positions were cut down. It wasn't as exciting. And then you didn't have the people. I mean, the people made that story because I got to take a crowd out. I got to get run over by a crowd. That euphoric feeling, you talk about sports winning a championship. I
was going to say, it's like being in a zone.
There was nothing like it. And, thank God my bosses had the faith in me in 2005 to not only agree with me, but to go over the top on me on that one, and it worked out.
I picture you, Dan Aykroyd, Eddie Murphy, just standing in the middle, surrounded by people, and then you shorted frozen concentrate.
Well, that's
142.
That's my biggest pet peeve. People, tourists come down to the floor, and they always quote that movie. I'm like, that wasn't here at the stock exchange, But the 1987,
NYMEX, right? NYMEX?
Yeah, it was in the World Trade Center. Ironically, we were just talking about it, and that's hand signals. We don't do that. The only hand signals we do
commodity exchange.
Just middle finger.
I know everyone.
Fungal, but
I know everyone thinks it's a trading play, but that's the only story people know from movies.
Yeah, but those times you can't recreate. And now when you have a good trade, it's you buy 10,000 shares and you feed it out as it goes up slowly but surely. You're not taking big positions. You're not doing anything overnight. When you have those big gaps, that's when you trade it, and that's where the technicals come into play. Because now I will focus on how do I trade this gap? Where's support? Where's resistance? And I keep it very simple. Our friend Brian Shannon, what he's done with VWAP trading, that's what the day traders, the swing traders in your audience and this audience need to follow, because you have to be on top of everything. Yeah. And those are the signals for a day trader that work the best, in my opinion. But for those intermediate, longer-term traders, you just keep it simple. Keep the process simple, and you're going to take a lot of paper cuts, a lot of little losses. but you just can't give up the nest egg. And so many people, they want to swing for the fences every time. My worst trades were the stocks I gave away. All right, yeah, I had NVIDIA a while ago. I had Google on its IPO. I bought it under $100. I sold it at $150. I was a genius. I hit my goal. I look back, how smart was I then? But fun times, no doubt.
Yeah, no, I mean, it's amazing stories. There's a couple of things in the trading part I want to get into.
Yeah.
Time frame and keeping it simple. I've heard you in a lot of interviews stressing keeping it simple. And you've talked about the importance of time frame, knowing your own, not just for how you're evolving as a trader investor, but how it's important for other people. So I don't know which one you want to tackle first.
Yeah, it's tough because when we do what we do, we talk, and sometimes we'll have an audience. You have investors. You don't know what everyone's time frame is. Like now that I'm teaching this at Fordham, I have kids that aren't in my class. These quants, they're smarter than me. I mean, like I have this algo. Can you look at it? I'm like, dude, I'm sure it's great. You know way more about your algo than I will know. Hey, you can back test it. It's working. Congrats. That's great. But I'm looking at this, teaching the basics and looking at the long term to short term and hoping I get someone's time frame when I talk to them, because I don't know, when you do a CNBC hit or a Fox Business hit, the person in the crowd, I know the Fox Business are a little older, so are the CNBC people for that matter, and they're more longer term, and you want to give them a risk reward setup that's favorable for, the short term and the long term. And then what I do is I do multiple time frames. I was looking at stocks like IBM, looking at Citigroup. Holy God, symbol C. This stock is broken out above 80, and on a yearly time frame, it's got a saucer bottom breakout. This is good. You have downside risk where you can protect yourself, and then upside reward. So let's go back in time and look at that reward. Citigroup, remember, it split 10-for-1 reverse stock split. It's nowhere near, nor I think it will get anywhere near its pre-financial crisis highs. But the long-term base, these are setups that I like that have worked historically over time. The S&P 500, 2022 down, 2023, all we did was make back 2022's losses. So beautiful rounded bottom. When did we break out? First week of January. 2024, boom. Technicians got that market right. I think we were guaranteed a recession in 2023. Yeah. I don't know how that worked out, but I mean, obviously there was not even a hint of a recession, but the technicians were able to see these price patterns. And now when we're in 2025, I do a lot of mumbling. I'm not really sure. We could break one way or another. Headlines, chaotic, crazy. You never know what's going to come out. But that's when you just have to let the price action dictate what you're doing and get into a trade knowing your risk first. And this is a horrible way to live. I'm buying a stock, and what's the worst case scenario? Well, wait, I'm buying this stock so it goes to the moon like these kids wanted to do. Yeah. No. Okay, when do I get out of this? When does it not work? Or when do I cost average into it? I'm not doubling down. We're not talking in terms of bets, and there's a great book about that. Yeah. But you try to keep the gambling talk away from it. It's hard to do. It's really hard to do. But if I like an idea, like I see people go on TV. I haven't been there yet. It's coming. You loved Uber at 90. It's trading at 70 right now. You must really love it. I'm like, oh yeah, thanks. That's a great one. And yes, I do. It's at a nice key support level. It's actually holding this level well. It could come back to 90, but I've cost averaged into the stock. Or I got out of it at 85. It broke a major level there, and the trend is no longer there. Not many people on TV, I don't know if you've had it. They bring you on and like, hey, that was a great call, or oh my God, that was a bad call. I wish they held us a little more accountable to what we did, because I've had some really good calls. I wish they would come back and be like, hey, that was nice. And then there are times I'm like, oh, thank God they didn't mention FedEx that one time I mentioned it when it went down 30 the next day. It's interesting, but it's always in terms of risk reward. Long term, mostly, then bring down to time frames. And then, listen, I would love to go back and day trade and talk about the things I'm seeing. I remember during COVID, I think you may have been on one of these chats, sitting at home. I was in a garden leave period. And my couch is named AMC. My TV's named GameStop. I traded these stocks. I bought AMC at 4. I was out at 8 on like 75% of my position. And my kid's yelling at me, why did you sell it? It's going to... I'm like, oh my God. I don't need this aggravation in my life. I just got a double in like 3 days, maybe less. But that was my goal. That was what I wanted to. So I just try to keep it as simple as possible and know the downside before I enter any trade. And yes, I take a lot of little losses. And yes, sometimes my instinct was right at first. But over the long term, things have gone well by looking at it just like that, just over the long term. It's been good.
Yeah, with time frame, it's interesting because I find that a lot of arguments people have, whether it's in discussions at dinner, over drinks or whatever, or arguments on social media, it has to do exactly with what you said, which is time frame.
Yeah.
Meaning somebody could be selling a stock because they think it's going to go down in the next 2 days. At the same time, someone could be buying it at that time because they think it's going to go up over the next 2 years.
Yeah.
So when they're like, "You idiot, why are you buying it here?" Well, what's your time frame? "You idiot, why are you selling it here? What's your time frame?"
Yeah.
And the interesting thing is, well, first of all, why does anyone care what anyone else is doing? But people forget that not everybody trades like you. They just assume if I'm a day trader, then you have to be a day trader.
Yeah.
If I'm a long-term investor, then you are. If I'm value, you have to be value. If I'm growth, you have to. And I'm like, no, there's a million different variables, and people forget that. Don't assume everyone is doing what you're doing. Some people have multiple monitors. Some people are trading off their phone. Like, there's so many variables. Some people are trading full-time. Some people are working full-time. So people forget that you have to understand. That's why, going back to our friend Brian Shannon, when he says, make the ideas your own.
Definitely.
Like, have your own style, have your own time frame, know your own time frame, know your own, what fits your personality. If you're working full time, if you can watch the markets, there's so many variables, and there's not always a right or wrong answer.
Well, and
right or wrong
you do
answer.
a great job of that too. When you give how often do you do your broadcasts on Twitter and your webcasts? Those, you should do those a little more often. But
I'm trying to do what I can. But
make the trade your own, and you give someone an idea. And then you do your own research and you go with it, and you have.
Why would I do my own research?
Yeah,
no. It's like in Wedding Crashers. Make me a bicycle clown.
Yeah.
I just want the stock symbol. I want to be handheld through it.
Yep.
Tell me to buy it at 50. Tell me when to sell it. Tell me where to stop. Give me the exact prices. That's one of my. Now you're getting me fired up.
Yeah.
This is one of my biggest pet peeves because you can't tell Warren Buffett buy a stock at 50 and stop yourself out at 47.
Yeah.
He might be buying it all the way down to 27. And so in other words, that's someone with a different style and a different time frame.
Yeah.
So you can't tell a day trader to buy a stock at 50 and stop yourself out at 45. It might not even get there during the day, meaning it might not have that range during the day. So, like, people want, give me a stock, I don't care what it does, make me a bicycle clown, and to your point, okay, here's the stock. Why don't you try reading? Why don't you try researching it? Why don't you try making a decision? But I find the majority of people don't want that.
No, and here's the one stock that drives me the craziest. It's Tesla, because everyone has an opinion on this stock, and it's a cult stock. The only thing I can do is look at the technicals on this, because you do the research, their sales numbers are going down dramatically. We're trading up on hopes and dreams. Autonomous driving is coming, it's coming, it's coming. Meanwhile, Waymo is eating their lunch in 10 cities, going to Japan. No one talks about it. But everyone has an opinion.
You just pissed off half the.
I know, and that's
which I love.
And my
Which
feed gets nuts whenever I try
Which
not to
I
even
love.
talk about this stock on
I
TV,
know.
because I went negative once and it went down, then it rallied again, and it's going to have its ebbs and flows. And you look at it on different time frames, but that's a stock I will only look at technically. It's Bitcoin to me, because the fundamentals don't match it. I'd love to get fundamental stories that match my narrative technically.
That's ideally when things line up. It's
And
nice.
that is when you're like thrice blessed. You have the technicals, the fundamentals, and then the price action is going the way you want it to. That is a stock that I can get behind and I can gladly talk about. But when someone's like, hey, can you come on and talk about Tesla today? I'm like, oh my God.
There's 10,000 other stocks.
Thank you.
And if there's a mixed picture, then you can pass.
Yeah.
You can just say, I don't know. I don't have a strong opinion. I don't care. But again, or like there's other stuff to trade.
No, and then here's the other thing: sideways stocks that are basing. Microsoft's done nothing in the last 12 months. If you bought it 12 months ago, congratulations, you're even. It's basing, but there's a lot of money to be made in that neutral trend, and sideways is a direction. But people, they want to hear Microsoft. Well, Microsoft and Apple, they're not leading. Well, you know what? The market's still going up without these stocks. Let's talk about the stocks that are breaking out, that opportunities are presenting themselves, and we're seeing that broadening in this market. The market is going up with Meta, and as we tape this, I think it's up 20 days in a row. But there's rotation, so the market is acting healthy, but you're not seeing the returns you were once seeing because those mega caps are kind of taking their breath. We'll see what they do in the next few weeks, but it's an interesting time where we are in this chop zone, but under the surface where it looked like it was going to be bad in December, come January, come February, going into March, things are looking a little better than I had once thought, which keeps me on the bullish camp, especially over the long term. Things look good.
Yeah. You have a new role, Professor Woods.
Yeah.
How interesting is that, teaching a classroom? I'll tell you a really quick story. I gave a talk at Bentley University on tech. It was a technical chart.
Mm-hmm.
And I was saying, okay, this is like the dot-com. Do you remember this? At the time I gave the talk, I was talking about the dot-com and all these stocks blowing up. And someone raised their hand and they're like, sir, I was 3 years old then, so no, I don't remember. I sometimes forget. We've been doing this for a long time, that when you're talking about whether it's 9/11 or the dot-com, 99, 2000, you forget that some of the younger traders were not even born or were 2 or 3 years old.
I'll date you even more. I made a Chuck from Happy Days reference that no one got. You know, Chuck was the brother that went up to the attic after episode 1 and never came back. I don't even know if you knew the Happy Days reference, but
I know Happy Days, but I didn't
and then to jump in the shark and how that changed, and and Ted McGinley came, ruined the show. He ruined every show he's been on ever since. Married with Children, Ted McGinley. Oh my God, we jumped the shark again. But teaching is I'm learning just as much from these kids as they're learning from me. It's a lot more work than I thought, coming up with that game plan, how you want to teach this generation, because they see things very differently than when I taught, or I learned from Ralph's class. We're doing things a little differently, and we're trying to keep it updated to what's going on now. I haven't gotten to VWAP and volume shelf, two new studies that I think day traders need to know. And I don't know if I'm qualified to teach it, but I know how to use it. And that's the toughest thing. We've been doing this for a long time. Yeah. I'm like, you do this when it goes up. And you're like, can you explain that in English? One of the kids raised his hands. You said fill the gap. What does that mean? I'm like, thank you for doing that. I'm talking from somebody that, when stock gaps, it doesn't mean it has to retrace that gap up and fill. In fact, you want to see a series of gaps up, runaway gaps, before you see that exhaustion gap. And these will give you ideas when to take a profit, get out of a trade, enter a trade. So I've got to slow it down, and I have and then I have the quant kids. Oh, look at my algo that I wrote. So it's very difficult knowing that audience, because a lot of these kids, they're trading on their Robinhood accounts, and maybe they're trading after hours as I'm teaching. I don't know. I asked them if they did. I'm like, come on, someone's got to do it. Let's see what we're trading. No one's raised their hand yet, but hopefully by the end of my class, they'll be trading after hours, which is, I don't recommend. The markets are way too thin after hours and unpredictable. But teaching this is unbelievable, and I'm learning a lot from this next generation. They're grad school students, so they're mostly in their 20s, although we have some people older than me in the class, which I welcome, and they tell me what I can and can't say. Like, I try to be politically correct, but when you say, hey guys, we got to pay attention, you can't do that anymore. Jeff Probst, changing on Survivor, and I throw out guys all the time, and like, part of me cringes, really. We've canceled guys, and I'm not trying to offend the ladies in my class.
I know. I can't say anything anymore.
Yeah, it's tough, but it's given me a new lease on life. It's a lot more work, but once I get a semester or two under my belt, it's going to be awesome just to go there and see people that are interested in the market, just like us. When we go out, we're still talking about the market. We're still talking about things we've seen. We tell some stories, but this is, these are our babies, these stocks that we trade, and they're fun to share those stories. And we could go on so many different pivots as we sit here and talk, and we're going to look back and I can't believe we didn't talk about that. We can't believe we didn't talk about this.
I know, there's so much we can cover. I mean, we're getting towards the end of this, and there's so much we can cover still. But I think the point you made earlier about prepping for teaching helps you out, because that's why I have a tremendous respect for teachers, because people underestimate putting together a curriculum, a syllabus, a course, whatever you want to call it, just some sort of structure to teaching something over a class, over a week, over a semester.
Yeah.
And while you're prepping for that, that helps you out too.
Yeah, it's helped me out immensely. And one of the things I did that I brought to them is, how do we look at the market? What is the market? You know, you sit around, and if the Dow Jones goes down or up 1,000 points, that's the headline. The market was up or down 1,000 points. That's clickbait. That sounds good. 1,000 points. It's only like, what, 1.5%, if that, 2% maybe, at 45,000. But I had to, okay, the S&P 500 is the market. Let's break it down. How do we want to look at it? There are 11 sectors. Let's look at those sectors. Let's look at the most important stocks we follow. This is my personal process when I break down stocks. You know, when we're talking material stocks, which are, you know, first I thought it was a mean reversion. Maybe it's a little bit more. All right, let's break it down. Well, Linde, I didn't know anything about it. I don't even know if I'm saying right. Linde, based out of Ohio. LIN is the symbol. It's 20% of the XLB. And then you break it down. Then you have Sherwin-Williams. Then you have Ecolabs. And I look at Ecolabs. Whoa, we're breaking out. This is nice. Gap. And it extended. Now the materials under the surface are looking good. That's my process. And I want them to be able to say, hey, okay, let's break it down from the top down. So when they're talking about, you know, XLY, the discretionary stocks, you better know Tesla and Amazon, because that's 40% of it.
It's funny when you're talking to me, I'm following. That's your language. That's your style. That's your process.
Yeah.
And I always forget. I assume people know way too much. So
Without
when
a
you're
doubt.
saying, oh, it's 20% of XLB, and then I'm sure someone's like, Professor Woods, what's XLB? You know, like we just, you know, it's the materials ETF, but like we talk as traders when we get together, friends, dinner, whatever, and it's language to us. But sometimes I forget. I assume people know too much, and we have to sometimes. I'm not saying this disrespectfully, like dumb it down for them, but kind of you have to explain things because they don't have the experience. Or,
and that's the tough part, because you have some kids that know this and you have some kids that don't. But yes, you have to, and that's why we go through the S&P 500, then the 11 sectors, so they get an idea when someone on TV is talking about, you know, now they're learning, Golden Cross, which is the biggest lagging indicator in the world. When the 50-day goes above the 200-day moving average, for those that don't know, Golden Cross, Death Cross, greatest name of an indicator of all time. We have a Death Cross.
Like
Talk about buy the Death Cross. My God, by the time it hits,
it's almost like a coffee brand.
It is. That'd be a great water. Isn't there some death water?
Yeah, there is something.
But when we teach it, we need to put things in perspective and, you know, go back to the building blocks. And then, you know, if someone wants to teach, you know, talk to me after class and, hey, what do you think of this chart, and go in depth a little bit more. I mean, we haven't gotten to Fibonacci retracement levels, but that also goes back to my point. You want to keep it as simple as possible. Once you're starting to put more lines on a chart, more indicators to justify what you believe your bias is by wanting to buy a stock or wanting to short a stock, you're grasping at straws. If you can keep it simple, all right, nice base, breakout, gap on volume. All right, let's go back in time. Does this have something to reverse? Oh, my God, it does. Is this an all-time high? Well, I don't want to buy all-time highs. Yes, you do. Yes, you do, because all-time highs beget all-time highs. Those are the simple things. But then when I'm not sure about this, let me look at it from a fib level. Let me get the Ichimoku cloud and see what the cloud is telling me to do. Listen, everyone has their own process, and they work for different people. You just have to find the one that works for you, and that's what matters. So when you teach them the basics, and you want to learn Gann, you want to learn Fibonacci, you want to learn Ichimoku cloud, you want to go to Elliott wave, help me, shoot me now. I can't teach it. I can teach you what it is, the basics, and I'll tell you who to follow for the wave, but it's not how I do things. But there are very successful people, technicians, that's their bread and butter, and they've made a great living on it. Good for them. But I find what works for me, and keeping it as simple as possible has done that over my career.
Yeah. I feel like we could do part 2, 3, 4, and 5, but we do have to wrap this up because I know we haven't even gotten to the Eagles. You were at the Super Bowl recently.
I was at the Super Bowl. Go Birds! What a beatdown. That was fun.
Congrats
that was
on
fun.
That big win.
This was my first Super Bowl. You go New Orleans, great town, and the way they handled that was just epic. You just walk everywhere. The parties were unbelievable. I bumped into Jim Cramer. I was there, hung out with him.
Cool.
Oh, talk about!
I've never been to a Super Bowl, so that's cool that I've never.
Yeah, but when you go, you want to go to a classic. optimistic. You want, oh yeah, I was at the one where they wanted the last second
especially
field
if
goal.
your team wins.
But when your team is there and they just put on a beatdown like they did, I was pissed. It was 40-6, and we gave up 2 garbage touchdowns. Just stop. They already dumped Gatorade on the coach, and now Kansas City's starting to play. I'm like, oh, come on. But it was the experience. Being a fan of the team was epic. If you want to go for a good Super Bowl experience, probably not ideal, but New Orleans, hands down, what a great city for that. I assume Vegas was fun last year. You didn't go to the Vegas Super Bowl?
I did not go to that one. No.
Yeah, but how was it around Vegas? It must have been fun. I was
in town for it, but I did not go to the actual game. But a lot of energy, a lot of parties, a lot of great everything, dinners, everything.
You get Stanley Cup Finals in Vegas every once in a while. We don't get that in Philadelphia. We do have a hockey team. They used to be really good when I was growing up.
They used to fight a lot too.
Yeah, but you have a good one here in Vegas with the Knights, so that's fun.
Yeah.
Getting the A's now too.
I know.
This town is growing.
It's a lot of sports. I can't thank you enough for doing this.
Yeah.
Thank you for being a great friend. Thank you for just all the great stories. I literally feel like we can go on for a long time. We could probably do a Joe Rogan 3-hour podcast.
Yeah, let's not do that. I think a couple people may be falling asleep and they get to this point in it. But you and I had fun, and hopefully the people listening had some fun. And when you get to talk to somebody that enjoys the craft as much as you and I do, the stories just come and go. And I would love to turn the tables one day and hear about the storytelling. You were a stand-up comic or trying.
I've been around the clubs.
Yeah, we follow you on Twitter or X or whatever we call it now. You've pulled back a little bit from some of the funny tweets. Any reason for that?
I don't know. It's a good question. I don't know.
Every once in a while you come out with a few zingers, but it's not what it used to be. Not like 09 to 17.
I'll have to dig into my book of dad jokes and come up with some
dad jokes are the best. Yeah, the cringy dad jokes. Nothing like them.
Any final comments?
Any final comments? Just know your time frame. It's that simple. These quant guys, I love you. You're smarter than me. I will never be you. If you have a system that works, maybe I'll invest in it one day and just sit back and let the algos do the work. But research, hands-on, get out there, talk to people, get ideas from people that you respect. I think social media has gotten a bad rap because there's so many people that I've gotten to meet, you being one of them, in real life, following them, learning from them. You're always going to learn, and the market will humble you. So, if anyone says they've seen it all, like I said earlier in this pod, just walk away. This is fun, but it is a lot of work. As long as you enjoy that work, it's never a day of work in your life. It's the best.
Awesome. Great comments. I appreciate that. Thanks again for being here, and hopefully we'll get you back on soon enough.
Thank you.
Thanks, Jay.
Yep.
Appreciate it.